Hi there and welcome to this video. I would like to spend a couple of moments to walk through a few trades, perhaps perform an analysis just so that you get a little bit more familiar with how to use the software. As you can see, some of the software has changed over the course of the past couple of months. I have bundled the order accumulation indicator and the supply and demand indicator, and this you will start to use from the beginning of the new year. So I'll make all of the software available then so that you can start using the latest build. So that's primarily the only difference. Additionally, there is a modification that I have made to the supply and demand indicator, where you can see that now you only need one instance of the indicator. You don't need one for the current period, another one for the current period plus 1, and another for the current period plus 2. Now we simply have one instance. And so instead of having the greater period multipliers set to the value that you want to see, while you can only show the current supply and demand areas, like so, as you can see, you can also tell it to add other periods. So if we go 1, this will increase it by 1. So we have the current and the current plus 1, which will give us the 4-hour and the daily. And you can keep doing this, and I like to keep it on 0, 1, 2. This seems to work quite nice for me. And see, here we can see the 4-hour levels, which are the blue ones, the daily levels, which are the red, and the orange levels, which are the weekly. Yes, so that looks like that. The strength information, I have this down at the bottom. This is set to 55 on the thicker line, which is a slower, more profound strength reading. Then I have this one set to 21, which is the thinner, and this enable static period is set to false, so that this will change when I change the period. As you can see here, you can see what's going on. Just give it a minute because it has to download price information in order to perform the analysis. And so this is what you can see happening when the lines kind of disappear and start drawing. Okay, we'll go to the 4-hour chart, and this is what you want to do. First of all, you have to identify the trend of the pair that you're looking at. Let's assume here that we're looking at the pound New Zealand, because this is trending quite nicely. You can see that if you look up in the dashboard, you can see that we have swing highs that are being respected and swing lows, the orders at swing lows that are being consumed. And so we are in a technical downtrend. And so what you want to do initially is you want to draw a trend line. And so you can draw the trend line perhaps on the daily, to start off on the daily. And you have to find clear swing points to draw these levels at. So here we have, let me draw these on here so we have something to look at. And we have a high, a low, a high, a low, a high, and a low. And so you want to take the two most recent swing highs. So for this one, you could have a more aggressive trend line, which would look like that, but you could also have a more conservative, which would go from this one, and it would look like that. So you could actually draw two on this chart. So let's do that, just so that we have something nice to look at. So first of all, we'll do the more conservative from this high to this high, which looks like that. Then we'll do the more aggressive one, which is from this high to this high, like so. We'll go to the 4-hour and tune these up a little bit so they're nice and precise. That one there, that one there. And we'll select the daily level, and we'll go like that. There we are. And so now we have a nice clear picture of what's going on with these trend lines. And these are great because they show us very clearly what's going on. What is going on? Well, we have a downtrend. This is showed in the dashboard, it's showed in the trend lines, and it is also showed in the strength information as well. So we want to sell this pair. So where would we look to sell this pair? Well, this is when the supply and demand indicator plays a key role. So you can see that all the way up to the weekly, we have the downtrend. On the daily, we have a downtrend. On the 4-hour, we have a downtrend, and on the 1 hour, we have something that's going sideways. So you can see that there's no clear reading. And this morning, just an example, I was going to take a trade where I was going to sell here, right on this pullback here, but I took it off because there was some, what was it? There was retail sales out of the UK, and so I wanted to be a little bit careful, so I removed it. But had I left it on, it would have worked out very well, which again just shows the strength of these supply and demand areas in combination with the trend and the strength. So what we want to look for is we want to look for a place where we've had a very strong pullback. So we can see that we had this move, went like this, then price sold off very sharply. So when you see something like this, like an area like this one, let me draw around here. When you have something like this, or something like this, where you have a price that moves higher or lower, and then is rejected very, very aggressively, like this one here. We have another little one in here. We have a smaller one in here. We have another one here, another one here. The area where price was released from is the area that is price sensitive. So if we have a look at these areas and mark them off, this is a pretty nice one. Additionally, we have this one here, which is a nice one. Then we have this one down here, which is also a nice one. You know what, I'm going to remove the supply and demand indicator from the chart just so we have a clean chart to look at with just price. So you can see here that we've had some very nice pushes away. So this is in relation to moves lower. If we look here, we have this one for moves higher. Yeah, that's about it. I think I'll leave it at that for this one. And so what you need to look for is you need to see a release, a nice release higher. And while this one made a release higher, when price was released from here, it wasn't initially able to remove these highs here. And so the actual area of release that removed these highs is this area here. And this area is good because it took out opposing supply here and here and here. So this is a nice area here. But you can either look at this one and you can consider this for a trade, but due to the fact that we're in a downtrend, you want to be a little bit deeper. You want to be buying a lot deeper. So this will bring us back to the one that's just below, like the parent area of demand. And this is exactly where price reacted from. And so you want to look for areas where price, let me draw this, where price removed very sharply. Here we had a push and then a rejection. Here we had a push and rejection. Here we had a push and a rejection, and we had a push and rejection. And so these are nice for us for very obvious reasons. Okay, so let me remove all these little squares. Well, how would you trade these then? Well, you want to additionally, actually before we talk about trading, let's talk about trend line breaks. You can see here that we had a swing low, a swing high, a swing low, and a swing high. So we had higher highs and higher lows. So we can draw a trend line from here to here. This is nice. And we can see that this trend line was broken. And then you have to backtrack. At the point where the trend line was broken, which is here, you can see this little area here. You can see how a bunch of 4-hour bars managed to consolidate below this trend line. Then you have to backtrack and go back and say, where did the supply originate from that caused the break of the trend line? Well, then you can look at the bar. Is it this one? No. Is it this one? No. This one? No. Is it this one? Yes, it is. And so you go back up here and you say this is the area of supply that broke this trend line. So this is the area that you want to reference for a potential entry. So if you want to trade this, you would simply have to put your box from here to the high. So you would have your stop loss would go above here, and your entry would go just below the box. And this is what you would look for a trade. And as you can see, price came down, and it came back, and it referenced roughly the bottom of the base of this point of origin where price moved through and held below the trend line. So this is what you want to reference. And something that's very important to note here is that you don't trade any one of these areas of supply and demand. It's important that you focus on the areas of supply and demand that were actually capable of removing opposing supply and demand. So if you have something like this one here, for example, you wouldn't buy here. And why not? Because when price was released to the upside, it didn't consume anything. We had this little high here which it took out, but that's nothing. This isn't even supply, and so this is completely an unqualified area. So you wouldn't touch this one. So you wouldn't touch that one. Additionally, we're in a downtrend, so you want to be selling. You don't want to be buying this pair. So you want to look at areas of supply and demand that were able to consume some opposing area. So if you zoom out a little bit here, you can see this one here is quite nice because price is sold off. It accumulated orders, then it sold off again. And did this area in here consume anything over here? Well, it did. So let's get the pen out once again. So if you look at this, then you have to look back. We go back here and say, what was it able to take out? Well, you can see when price left here and then started to stall. So about from this point to this point, we'll say around here. So from this point to this point, you can see that this area of supply took out this low, took out this demand, and it took out this low here. And so we have a very significant area that we would like to sell out. So this is a very, very nice area for us. So this is where you would reference for a sell. So if we just use that as an example, and of course this is after the fact, and it's very nice and pretty because this one happened to work out, and they most certainly don't all work out, but we'll use this just as an example, and we'll draw the level. So you'd want to reference, you could reference it like that, where you want to ensure that you engulf, and you have a move lower, an accumulation of orders, and then a move lower, and so you want to ensure that you get the entire area where orders were accumulated, which is about here, the high of the bar, so about right here. And you can see that when price came back into it, price was rejected, but you see price moved to the high of here, and so this push back, while it forced price to move lower, it consumed all of the orders in and around this area. And so on the next approach, there were no orders here to cap price and hold price lower. And as a result, price was able to move higher and then reference the next reference point, which is just around here. And why is this one? Well, this is an hourly area because you can see how price moved up here. And the break of this hourly trend line originated from this price level here. So if we draw that, you can say from here to the high, which is right there, and this is exactly where price came back to test at a later stage. So this is just something you want to be very mindful of. So you don't want to go and trade all of these areas, but you want to find out where supply or demand exists that was able to consume opposing supply and demand, or break a trend line. So this one here is interesting because it broke a trend line. This one here was interesting because it consumed opposing demand further on to the left here, so historical demand. So these are two very nice areas. And this one isn't very interesting. This is just a continuation pattern. While we did get a small reaction in there, probably a small reaction in here if we go down to the smaller time frames, it wasn't able to cap price for long enough to be at a profit. So just be very mindful of that. So if we write that here, So there's the first one. So you want it to consume supply or demand, or you want it to break a trend line. So these are the two reasons that will qualify an area of supply or demand. And so let's say if this is 1 and this is 2, so we go back here, we can say this is qualification rule 1 and this is qualification rule 2 here. So here we have two good ones. So this is definitely what you want to pay attention to. Right, if we go to the indicator, now we've done it with a naked chart. So if we remove everything and we apply, okay, sorry about that. So if we consider, if we apply the indicator now, you can see that there are a bunch of levels being drawn. And these are beautiful because they tell us where price turned around, and it'll draw an area that has not been violated. So if we look at this one here, we can see that price created this, the indicator drew this level right here, and we can use these to draw our squares. So if we go, for example, from the base to the high like that, this is great. And so we can say this is an area that we'd like to reference in the future. And price has not come back and tested the base here yet. And so this is a fresh area of supply here. And you can see that there's an indicator line just here. And the indicator will continue to draw that line there until price manages to move outside of this box or above the high at which the area of supply was established. When this happens, then this area will be removed, and then it'll only draw the levels above it. So we'll see this one here and this one here. So these are the next two. So once this one is broken, then you reference the ones above here. And it's a really good and very powerful way to trade, because you know that the indicator is only showing you levels that have not been violated, which is paramount to trading supply and demand. Because you have to think about, for a second, if you have an order block here, and we have a low of the box here, and we have a high here. There are a bunch of price levels, order levels, liquidity in and around these levels here. So when price comes down here and moves up, I mean this one is gone. When it comes down again to the next one, it consumes the liquidity at that level, which makes it easier for price to come down and penetrate the area at a later date. So that one's gone now. We have a move higher, another one, and that one's gone. When you come back to the bottom one here, well, there's nothing left here. Everything in this box has been removed, and so there's no resistance. So price will be able to cut through it very quickly. And so this is where this theory plays a very, very key role, because once price moves into here and starts consuming these order blocks, as you can see over here to the left, the level will become weaker and weaker, and price will have a much easier time moving deeper and deeper, and eventually beyond the area of, in this case, supply. Yeah, I think I'll leave it at that. This kind of got a little bit long, but I hope it perhaps sheds a bit of light as to how we trade these areas. The theory is pretty simple, but it requires that you trade levels that have respected the two rules. So an area that was able to consume opposing supply and demand, or a level that was able to break a trend line. And the reason these rules exist is because if price is able to consume opposing supply and demand or break a trend line, then you consider it to be big enough or strong enough, as it managed to break the structure of the market, so to speak. So yes, well, I think I'll leave it at that. I will address this stuff a lot more in the future in coming videos. But if you have any questions about what to do and how to do it, please let me know, and I'll gladly get back to you and help explain some of this stuff. Good stuff. Thanks very much for watching.